Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 27th of September, 2018, about 4:20 p.m. Central Daylight Time. If you're like me, you have been watching these Kavanaugh hearings. They're historic. It's that simple. They're historic. You got to watch how terrible politicians can be. I don't know any other way to say it. I'm embarrassed. Wow. But it's something that I'd make children watch to see America at work, or how dysfunctional our politicians are. In any case, that's my politics for today. I'm not mentioning anybody, as you can see. I just think the whole thing stinks. In looking at all that's going on here, the corn, the wheat, the beans, you're getting mixed pictures as the markets are trying to set themselves up for tomorrow morning's 11 o'clock report, and we'll get an idea of what the stocks are going to look like again. Are there going to be any big changes? You know, we're getting further along in the season, and now these numbers have real meaning to them. They're not going to change that dramatically. So you start looking to see for the changes. If they're not there, you get better ideas as to what's going on. Dollar still very strong at the expense of a number of currencies, and this is the aftermath. It's what I call the yin-yang effect. The Fed makes a statement, does it with a big announcement. You got to remember, Asia's asleep, Europe's markets are closed. Then as they reopen, they get to digest, and it all comes home to roost. In the meantime, even with the stronger dollar, stock market higher. When we take a look at the soybean market, the question traders are going to ask is the 810.5 to 811.5 area, these two zones, was that the harvest low? That will be what you start hearing themes about. I'm not saying it is. I'm saying those will be the themes. As you can see, we've been bumping along with the market that is trying to grind its way higher. You can even see that grind in the pattern of higher lows, higher highs. Today's high in the Nov beans was 859 over that 855 level. So we still grind there. Prices are staying over the 18-day moving average of closes, that line that I call the line in the sand. On pullbacks, that's often where I see support. On rallies, it's where I see resistance. And it's from that number prices often make a move. The interesting thing is what's going on in the Bollinger Bands. We have sideways action. So you think of it this way. A Bollinger Band's an algorithm designed to keep the market trading within it 95% of the time. The band can either have down slopes to it, you see some more back here, it can have up slopes, but it's from the sideways action that most often, that's what I've discovered over my years in the market, that the market sets up new trends. This is a market, and you think of it like a spring that's inside a pipe, winding up, which way is it going to break out? At the same time as it's gone up to the upper resistance, it has gotten itself into overbought territory. This could be where traders step back from the market to see what the new fundamentals are going to look like with tomorrow's report, then make other steps in. Should the market take out the 837 level, you end up with a higher high, a lower low, no trend. In the meal market, meal's fighting a battle right here for direction. Momentum, as measured by the slow stochastic, pointing up. The bias is up because the market closed over the 18-day average, but it's battleground 18-day average of closes. Hard to tell which way it's going to go. I think in soybean oil, I'd argue that the market got up to an objective here. It hit 29.19, the upper Bollinger Band's 29.18, and it ran out of its steam. So often you either get to the top of a band or the bottom, and the market does that. This is a pattern of that sideways action. As you can see, eventually when it broke out, that pattern dropped the market down. We now have had a reaction back to the top of that where the market had the break, then it rallied back to where it was. It's gone nowhere, if you really think about it, over a 2-week period. In the corn market, again, the question's going to be, was this low enough at 342.5 to be a harvest low? That's going to be the question that I think a lot of people talk about. There is no trend as I see it. You have a lower low, higher high. That's nothing. You also have an overbought market. In the wheat, the trend turned back down. You have a pattern of lower highs, lower lows, prices under the 18-day average, momentum turning down. If this market has legs to it, maybe it gets to the lower Bollinger Band. The resistance should be rallies back into the 18-day average of closes, and getting over the highs of yesterday, which were 527, would negate this downtrend. If you look at sugar, it's a market that is similar to what I just showed you in soybean oil. It broke down, had a big rally, and fell all the way back to where this whole thing started from. What's the trend? Down. Momentum, oversold, market riding the lower Bollinger Band. Nothing bullish on the chart at all. In the coffee market, here we go again. Prices challenging one more time the 18-day average of closes. Now, the pattern isn't what it was before. You have lower highs, but you have higher lows. Always pay attention to that. And while the resistance is right here at 99.79, momentum is trying to turn up. I'll call the market still looking to see if it's going to respect that 18-day average of close resistance. Cocoa market has managed to stay under the 18-day average of closes since back here, about at the end of the first week of September, and prices continue to work lower, riding the lower Bollinger Band. Now, as you can see, both numbers that make up the slow stochastics are under 20. They were under 20 yesterday, not the day before. Tomorrow's a very important day. If you get 3 days of it, it converts the market from oversold to locking in what I'll call a downtrend, like you did here. See, this is the embedded reading. It's just stayed in place. And notice how the cotton keeps slipping down. Until you lose that reading, I say that the pros are waiting and they'll use momentum instead of pricing, figuring out the market. In the cattle market, we have a market that still has a bullish embedded reading. That is favorable to the market until it loses it. The market has a pattern of a higher high, though, and a lower low. Feeder cattle still have this pattern of lower highs, lower lows, overbought. If the market wants to correct that situation, it should not get back over 58.82.5. Instead, I'd look to see if the market makes a run for the 18-day average of closes to neutralize everything. Somewhere along the line here, it either's got to correct the overbought condition by embedding, that means going up again and going through that process of getting both numbers to stay over 80, or you correct this by getting a drift back down. The pig crop report came out, and as I saw the report and analyzed it, I'll call it pretty neutral. Nothing overwhelming, bullish or bearish. The pattern on the chart is lower highs, lower lows. A lot of support between 54.17 level. Actually, that's about it. Momentum down, bias down, still very much as a technician in a bear pattern. I want to remind you, we write about these markets. Yeah, unlike a lot of firms, we do a lot of research. I mean a lot of research. If you see all the reports we put out on any given day on all these different markets, you'd be pretty amazed. And no, you don't have to see them all. Let's assume that you're a grain trader. You may not want to look at the energy markets. You might not need anything on education. You pick and choose, but you'll get to see what we write for hedgers, speculators, commercial users, farmers. It goes on down the road. How do you get a free sample of it so you can get it for a few weeks? Call us. You can go to our website to sign up for it and any of our other offers. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.